start in the middle of the conversation because I don't know, that's the way I like to do it. So we're already going live. I guess this is episode 2 of Michael Fang's experimental podcast with crypto founders. So I'm really excited to have on the show Nick Fett from Tellor.
Hey, yeah, awesome to be here. It's good.
Yeah, so this is actually a result of a comment that someone posted on the first one, asking us to me to bring on Nick, and it was actually really timely because Nick was actually the person who interviewed me for the first ever podcast about Hummingbot, way back in I think January 2019, right, Nick?
Was it 2019 or 2018? I guess 2019, but yeah.
I think it's 2019 because that was actually right before we weren't even launch Hummingbot, because Hummingbot only launched in April of 2019.
Okay.
So it was super cool. And, it was. I really just being able to tell you that story about kind of like how we started Hummingbot, how we did the whole SEC settlement, and then kind of what led that into what would eventually become Hummingbot. Was super cool, and I'll link to that episode in the show notes because I think it's still actually on the Daxia podcast.
Because I found you based on the SEC settlement.
You did?
I saw the SEC announcement, and I was like, man, this is super interesting. I'm going to reach out to him, and then you were starting a new thing, and you came on, which was cool.
Yeah. So I think that we've kind of followed each other throughout the years, and it seems like Daxia has turned into what's now Tellor. And now Tellor is one of the leading kind of decentralized Oracle projects in crypto, right?
Yeah, cool. Yeah, and Hummingbot's up and running still. So
it's been an incredible journey for I think both of us, and I think and ultimately the goal of this podcast is to really highlight the journeys of crypto founders, and from an unvarnished, authentic perspective. My motto is no content marketing. So I want people to really talk about the journeys and really how the startup works from a technical perspective, not from a biz dev and marketing perspective. So that's it. So let's get started.
Jump in.
So Nick, so I always like to try to start as early as possible. So maybe Nick, can you tell us about your childhood and what it was like, where you grew up and what your childhood was like, I guess.
Childhood, geez. Didn't always start that early. So I grew up outside of Pittsburgh for a little bit, and then moved out to Ohio. Grew up. I have 3 brothers. I'm the oldest.
Nice.
Well, one of them's a twin, but I'm still older. And then we grew up actually. I was homeschooled until high school.
Oh wow, interesting.
Yeah, and then I sort of grew up in a very evangelical Christian home. Went to evangelical high school. Yeah. And that was, definitely, it wasn't really like finance or coding, none of that stuff. I mean, I played video games, but that was pretty normal.
What did your parents do?
My dad's actually an airline pilot.
Okay.
And then my mom, she is a horse trainer. So
a horse trainer.
Yeah, nice. So for cool. Dressage. So
yeah. So do you know how to ride a horse then?
Yeah, so I was on the equestrian team in college for a year.
Oh, cool.
It was so grew up we had a barn attached to our house, and
nice.
Grew up as a kind of homeschooled farmhand. That's what it felt like for most of my life.
Okay. So that sounds like a really interesting childhood, actually.
Yeah, it was good. I guess and then I left after high school. I went to West Point for 2 years.
Oh wow! Okay.
So I got accepted to the military academy there.
That's interesting. I actually thought about applying to West Point as well. Actually, I actually did a summer camp there at one point after my junior year of high school.
Cool.
Just to check it out, and I decided not to apply, but I actually really liked in some ways, I thought that it would not be a fun time there, compared to going to college other places. But I did like the structure of it in some ways.
Yeah, no, I mean, it was good. I really didn't know what I was getting into because I left. It was I'd never done anything really military related. My grandparents were in the military, but no one I actually knew. And then. So I went there, and it was kind of an eye-opening venture for me because I wasn't necessarily as into the military. I would have liked to have been, but I did 2 years there. Obviously did the equestrian team. Didn't necessarily, and then sort of while I was there, didn't realize I wasn't the biggest fan of kind of following rules in general and kind of war at the time. So it was, I left and then I went to Westchester, which was outside of Philadelphia. So I went to I left like, it was like a week before. So like after West Point, like the first 2 years are actually free. So in the military academy, and then you sign the papers that say you have to serve the next 8 years in the military. And a week before I had to sign the papers, I chickened out and
got it. Interesting. Okay, got it. So you got 2 years of free college education then.
I got free college education. So that was good. And then I left and did. I went to. It was like there was like a small state school in Pennsylvania, which was like, it was like the only school I could get into in August.
But that must have been a tough decision for you at the time.
Yeah, it was really tough. It was definitely something. I sort of talked about doing it, but like. It's similar to like whenever you have like a prestigious job and you leave to do a startup or something, and everyone's like, "Why are you doing this? You're doing just fine." And but it was like that sort of like first taste of disappointing my parents and moving on and kind of doing my own thing. And it's sort of I'm still friends with tons of the guys there, so it was definitely a good experience. But yeah, it was kind of leaving, and then it was also good seeing kind of the other side. So I went to this more traditional state school, and I was an economics major there, and it was an economics program. There were 8 of us, so it was a school there was a school. It was a 15,000 person school, and there were like 8 economics majors. It was a tiny little program, but it was actually good because it was you got a lot of like hands-on attention from the teachers, and that was like whenever I started really getting into economics. So I got into I started there in 2008, and it was a great time to get into economics at the time. So I kind of fell headfirst into like the Austrian economics. So 2000. Like I just started like picking up and reading everything I could on the topic. So, it started like the Ayn Rands and then you go into like the Mises, Rothbard, Hayek type stuff. And really just kind of became almost like my identity. And, so like whatever I like left in, like I started in 2008, it was like the Libertarian Club on campus. So you could get like 5 or 6 libertarians out in 2008, because it was all like, it was just Obama fever at the time. So nobody, we were nobody was really following the libertarian movement. But it was a good experience, for sure. And then in 2009, since I was like into the whole, I went down to Mises University. So like I got to go to study Austrian economics down at like the official headquarters, and I was actually an intern for Peter Schiff that summer.
Interesting.
Like
Peter Schiff, the Bitcoin, the anti-Bitcoin.
This was obviously pre-Bitcoin, but at the time, like
pre-Bitcoin. Interesting.
This was pre-Bitcoin, so he didn't. I had read. So he had a book, and it was all about. He was very anti-Federal Reserve at the time, and his dad actually had a few books that was like anti-income tax. And I wrote to him and was like, "Oh, can I get an internship?" And his brother, who was like his head of marketing, or I don't know what his brother did there, but he was like, "Yeah, like you can come be my intern." So I was Peter Schiff's brother's intern for the summer, up in New York, and that was a blast. And
that's cool.
And it was like, all the guys it was a small brokerage. So, they basically sold foreign stocks to people who were fearing inflation.
So that was like in the middle of the great financial crisis. So at the time, were you kind of like aware of what was going on and kind of like what was happening in the markets?
Yeah, for sure. Like I had a bad experience kind of. So whenever I left in like 2008 from West Point, I like took out some student loans to pay for my college then. And then this was back, they would actually just give you like 20 grand into your bank account. And so I was like trying to day trade
loans,
it.
right? Yeah.
Trying to day trade my student loan money. And that did not work out as well as I would have hoped. So, but then
something I'm sure a lot of Robinhood users have learned over the past.
Yeah, don't trade your student loan money. But it was good. And then in 2009, I mean, even like Peter Schiff, like he had correctly sort of predicted the whole financial crisis, and he was saying, like the housing bubble is like he was sort of famous even to the financial crisis because he was calling, he said the Fed's low interest rates are fueling a housing bubble and it's all going to blow up in their face. He got that 100% right. And then he was like, well, so to protect ourselves, what we're going to have to do is we should go buy foreign stock. So he had this idea of, there's going to be some bulls in China and all these other smaller countries that were actually building things and doing, becoming more capitalist. And then he was also really big on gold at the time, and gold and commodities as well. And the problem with this whole thing is he predicted it right, but then it just didn't play out at all like he said he was going to. This was like, I'm sure everybody knows this year, like inflation's really high, but like Peter Schiff's been calling for inflation to be really high since 2009.
Right. And, I see. Yeah.
Now, now we're just getting there. And so
what's the expression that the clock strikes once
correctly
every 6 minutes.
The clock's always right twice a day. And it was sort of that thing. So we were, whenever I was working for him, that was a really good, like I think Austrian economists in a lot of ways like got a lot of things right, and some of their models are really helpful, but just whenever you don't have any sort of ability to predict timing, it's almost useless. It's because like inflation, like you can say with like 100% confidence like the dollar will eventually go to zero without saying anything about the timing of it. It's a useless statement, and that's some of the problems. And then they also they would be like hyper rationalist on a lot of things. I noticed a lot of the people there, and that was something that like over time I had sort of pushed me away from the space. Even a lot of the Bitcoin deniers are still like, you can come at Bitcoin from if you come at it from a very rationalist perspective, it can be hard, but meme created money and some of these things, like it doesn't have to be this purely rational perspective. And even if anyway, that's
I mean, I'm talking about this more, but for me as a student of history, I always think about like the long span of like human history almost, and what people use as like quote money, which started as like basically like dowries back in the day, and now it's transitioned into using like paper money, and then like now it's like after all those now basically essentially every country is running some form of stable coin out there,
right?
And so it's kind of like the lines are just getting blurred between everything was currency versus spendable NFTs or other assets, which are basically resources as well that people were controlling. And I think a lot of the assumptions that economists and finance make are, it's almost like the way I have this question I always say, which is like finance is like it's a soft science masquerading as a hard science, because it's like physics. There's like real laws that people have discovered, but I think finance is more like psychology, where it's like there are these like laws and there are things like principles that make sense, but it's not like hard and fixed natural laws that actually do exist in like physics and other like more hard sciences.
So. Yeah, no, it's exactly right. Because what'll happen is you'll see people will just make some assumption about money, like, oh well, we can't print money whenever we want, or can only get created in this manner, and then you follow a bunch of assumptions down a rabbit hole that says and therefore our version of capitalism is the best, and you're like, well, like the assumption's wrong, like, well, or like exactly. COVID hits and we pay
garbage out.
Yeah, COVID hits and we pay everybody $1,200, and we're like, what happened there? Or like the Ukrainian crisis hits and instantly we print billions of dollars, and you're like, wait, like we have trouble with healthcare, guys, or something like that. And it's like, like why aren't we changing the rules up more often? And and that's really that's one of those things that always sort of gets to me. It's just like, you have to break down what the assumptions are, and most of the time it's just self-serving.
Yeah, no, I know, and for me, I think the big transition for me was always like just kind of like, I think moving from the finance and the banking world over to the tech world. For me, that started happening like 11 years ago when I came out here, and I feel like I just like feel like just overall, like basically just a lot of the things that people discover in technology, which is build reusable systems, try to like have like these like protocols and primitives that you can experiment with and have competition for how you do things. It's almost like that whole mindset hasn't really penetrated all of kind of like finance and banking, where right now finance and banking, I see it as like there's still a lot of like really large companies and governments making decisions on behalf of like everyone, and it's almost like, hey, this is how it should work, and everyone just like goes along with it, and no one says, what if we just thought about doing things a different way.
Yeah, I mean, to be honest, that's my favorite part about DeFi and everything. It's just like, it's just the innovation here is just off the charts.
Exactly.
Which we can get into later, but it's like, like I'm like literally like I set the inflation rate on a currency I run. Like, it's like absurd.
Yeah. So that's fun stuff. So let's finish off your story and get into the fun part. So after the experience working for Peter Schiff and kind of going through this, basically really digging this deep dive into the Austrian School of Economics, like how did you what did you do after university, I guess?
Yeah, so at first I went and I was an intern for a year at a libertarian think tank in Pennsylvania, which was good, but I didn't make any money there, and then I left to get a real job, and I worked for the government. It was like the only job I could get at the time, and I worked as an economist at the Bureau of Labor Statistics, actually. So I was doing the employment numbers, so the non-farm payrolls. So if they say like, 700,000 jobs were created last month, that was like my number. So I did. I was working as an economist. We did like the seasonal adjustment. We did so benchmarking. So like the revisions month by month and things like that. So that's what we worked on. Did you freeze? Did I freeze? Damn it. Okay. Michael's going to have to chop this off. We'll see how he does. There you are.
Oh, okay. So sorry about that. Yeah, my Wi-Fi, I think, just died. Can you hear me now?
I can hear you. So we're back.
Okay, I think we're back. Okay. Yeah, this is cool that Restream actually, didn't terminate the broadcast, and connected automatically when I connected my Wi-Fi.
I was trying to fill the blank time for you. It was
really
good.
Okay. Awesome. It's okay. This is this time I'm not live streaming, and I'm going to try to actually edit the video afterwards. So
okay, cool.
We can just smooth that part over. But who knows? Might just leave it in. Maybe I'll add some color to the feature. So I think as we were saying, I think you were describing your first job after university.
Yeah, so I went to a libertarian think tank, and that was around that time was actually when I first heard of Bitcoin. It was nice and early. This was 2011 period. Thanks for being in the libertarian think tank. And it was I got involved with the Ron Paul 2012 campaign a little bit.
Nice.
So yeah, cool. I did some phone banking there, and
yeah,
it was good. But that was there were a few people who were mining Bitcoin at the time, and I got a few Bitcoin, and it was nice. Basically back then it was known you couldn't really do much with it.
So back then, I'm curious, like how did you actually get it? Like what was the format?
Like I remember the one guy who was there, he like told me to go download the software, which was like, it was like the mining software / wallet, I think, at the time. And then you got this thing like an address, and he's like, here, I'll send you something. And he said, sent me like 2 Bitcoin or something, which was not much at the time. And we just chatted about it. And yeah, that was kind of it. And then I tried my hand a little bit at mining, so you could do it like with a GPU then. So it was, didn't really think much about it because I honestly thought it was still kind of scammy. But it was, like back then you were talking about it much more in terms of, this is an anonymous credit card that, people are going to use it because they get rid of credit card fees. Like that's why you would want to use this. It's going to be cheaper and better for everyone to use. And
what's interesting is that was also when I first heard about it. That was also the kind of the premise. It was like anonymous, cash, and I also thought it was kind of scammy as well. But what's interesting is that I read a poll, I think somewhere, where it was like talking about like the different motivations of people buying Bitcoin, and it was a polling done over time. And what was interesting, even the digital thesis, which was, I think today the prevalent kind of use case for Bitcoin, even back then that was like 20 to 30% of respondents said that was their primary reason for buying Bitcoin. So I think there was this kind of underlying kind of like investor class, quote unquote. That was like supporting Bitcoin. But what was interesting, I think what I'm saying is more like, if I had heard that thesis, I would have been much more interested in buying Bitcoin. But because I had only kind of like was exposed to the the scammy anonymous cash.
I loved that part. That's the part I wanted it to work.
It's possible that because I think I was tainted by having worked for JP Morgan, so I was still exposed. I was still thinking in terms of the corporate mindset.
No, it was like we were talking like in the libertarian circles. It was like is this like you could theoretically have this unstoppable money, so like it would be like sort of this Hayekian competing currencies world where you could have a Bitcoin, or you could have like a Litecoin and a Feather coin, and they could all be competing currencies, and they could run about, and it would be great because now the Federal Reserve, like they're welcome to compete on their own, but we can all run to a different one. And that was like, in my mind, that was a phenomenal
and I think we actually might get there.
Right, like it's still kind of where I'm at with the currency. It's like, well, we got to keep working on getting it actually private, anonymous, and cheap, but we're on our way. But so then I got into there, and then I probably started actively trading in like 2013. So that was like whenever you could. I like sort of learned coding for this. So I was doing SAS at the time in the government, so like statistical software like R, and then I learned Python to start writing trading bots for like, there was like, if you remember BTCE, and like even some of those other ones like had early just API access directly into the exchanges from and it was awesome. Like I was like, you can't do this with normal stocks. Like it's unheard of. And you could just write little bots to trade cryptocurrencies. And
nice. So what kind of bots were you building in those early days?
So sometimes cross exchange arbitrage. So if you connect to multiple exchanges, sometimes you would do like trend following. So either, or it was either like you did like market making general, like either it's like a trend following or a mean reversion strategies, and you would write them both out and try and back test and figure out which ones might actually work. And it was fun. I wasn't very good at it. I would try, and then I was like taking like the machine learning classes on like trying to apply that stuff. I'll go somehow go take the Stanford course on machine learning and then make money on crypto trading. But it
it's funny you say that, because one of the reasons we started Hummingbot is because I think in all of 2017 and 2018, like as we were running our quant hedge fund, I met a number of like individual people who had just were doing market maker on their own. So they had either built a bot themselves and were running a bot, or they just it was like a side. It was like for some it was a side income thing, but for others they had really turned it into a full-time job. And so that was actually kind of like, we thought that people needed some tool or framework to help them do that, and because there seemed to be this growing number of like individuals out there doing it.
No, it was like I made like $20 to $50 a day for 6 months.
But it feels great. Like it feels like free money, right? It's like that $20 to $50 is much more valuable than anything you do in your spare time, because like, to me anyway, that feeling of arbitrage is like a really
but it was like $20-$50 a day for like 3 hours of my day. It was like minimum wage or something. That's on fair. Like if you actually calculated it out, but which was ultimately why and then I had had my first kid in 2016, and that was
right, yeah.
Your time to do that kind of stuff goes away. But no, it had sort of opened me up to this whole world of kind of automated trading and everything. And then in early 2015, I got a job at the CFTC. That was my next gig.
Oh wow. Okay.
So I became a researcher there. So I was working underneath the chief economist there, and we did market structure research. So the CFTC, that's the financial regulator, and it was great just because basically they get every single order on at the CME or any of the commodities and futures trading stuff. So it was just like an unlimited, untapped data set that you had access to do research on. You have to be. It was really hard to like actually publish anything out of there because you couldn't like give away anything, but you could really just have at it with the data on your own, and it was a blast. So that was I published I think 2 papers out of there.
Interesting. Okay. Were the papers public, or are they?
Yeah, they're on the CFTC's website. So one's on.
What was the subject?
Both of them are in liquidity, and one was on like categorizing types of futures traders. Another one was on like liquidity and selected futures markets. So I did like order book analysis and like kind of looking at like replenish rates
okay, that's interesting. Yeah, I'll try to check out the papers and maybe post them on the show notes as well, because I think that one subject area that I think this podcast and the newsletter is about is just liquidity in general, because I think it's an area that I think will be more and more important as there's more markets and as those markets are increasingly both interconnected but also fragmented.
Yeah, no, I mean, try and talk to the CFTC guys, even like reach out to some of the researchers, like they'll just talk to you about them. Lots of really good research on automated trading in general, high frequency trading. Because I mean, we would, like I was there where they would do like a lot of the flash crash analyses. They were trying to formulate a bunch of rules around that. And I mean, even some of the bigger things that shocked me when I was there, it's just like, when you realize like, oh man, like there's like 5 people in each market. Like that control the vast majority of it. It's like
I know what you mean, and actually, I think that's actually I would say the underlying like really the motivation behind why we're trying to do Hummingbot, because I think everything I've heard from my friends in that world, in the traditional finance world, is that there's a lot of these like kind of like esoteric markets that are actually really big, but because they require special tooling, and because it's like it's kind of started as a big boy kind of game, it never kind of like it never kind of created space for smaller entrants into the market. And now it's like, even though ideally I think everyone wants there to be smaller entrants, it's almost like there's too much inertia behind the current system to change it, to actually create incentives for smaller players to come in. So I know actually the CFTCs and governments have tried lots of pilots over the years to encourage this, and I think that's why in crypto I always felt like at least like if we just start from a tooling perspective and created more open source tooling that people could use, it would just gradually democratize access to this market.
Yeah, no, I completely agree, but it's it just shed a whole lot of light on like what is the finance sector even for? Like it's supposedly this giant thing, but it's like 5 or 6 guys losing money to each other or making money off of each other, and then you have like it was usually like only like 100 or so retail traders on these things each day. Like it wasn't
100.
Like it's not absurd amounts.
And when you say, are you saying is this for like one single
like
trading
mini
pair,
contract
or just like one contract, or is it for like one single venue, or
for like one contract or something? It would be like it would be like under 100, and it would be it's not a lot of people out there, and then you also realize like the CFTC publishes those statistics, like 80% of futures traders lose money. Like
really.
Wow. You're most likely going to lose money retail trading.
80% of futures traders. You mean they read the retail folks?
The retail folks, the retail folks are you're going to lose money almost guaranteed, because you're just going to get eaten alive by the pros, and and it's really, I think we have a little bit of that problem in crypto at the moment. Where now the pros came in. Like I was doing it probably before the pros were there, but now like now basically you're trading against a team of PhDs over in Chicago who does this for a living. It's super tough.
Yeah. I think that, I think in terms of like price prediction, definitely, it's kind of like the directional strategies, in my opinion, are that those are the easiest ones for pros to come in and just, eat away, because their algorithms, their prediction model is just better than a lot of ours. And so like a lot of that's why, in my opinion, a lot of the technical analysis type stuff worked back in the day, but they didn't once, like people started using math instead of relying on kind of pattern matching using
memes and
but I do think the one that does work, in my opinion, is kind of like more like what I call like arbitrage and market making in the long tail, because what's happened now is that there are all these new venues that have popped up on decentralized exchanges or centralized exchanges trading all kinds of weird new products, and because they're all VC backed, they have an incentive to essentially reward the early participants. And so it's kind of, you can almost like set up these trades where you're basically like providing liquidity to one venue because it's new, they're airdropping tokens on one side, and then you're hedging that exposure with some other strategy on another side where you're hedging that risk on DYDX and maybe picking up tokens for earning liquidity there. So it's kind of like you're basically making money not from actual trading, but more by kind of like providing transaction activity across the landscape to multiple startups who have an incentive to pay you.
Yeah, no, I joke about this all the time with, like I people now are like using products because they think they're going to get an airdrop. It's like, it's absurd because like, if they were to come out and say like, we're going to give tokens to people to use our products, well, that's not allowed. That's a security. But instead, if we just sort of don't say anything and we'll airdrop them later, that's cool, and the SEC will wave their hands. But no, I mean, I know you're familiar with it, and but airdrops were good to me over the past few years too.
Right,
I mean,
and I think that that's really the role. But I agree that it's kind of like the transition. I think that this is why I teach a lot of like people in Hummingbot. It's kind of like these are trading tools, but you don't have to use them in just the traditional way of how traders used to use them before, because it's like most traders are just they just want to make money. They're looking just ways to make money, and it's more of like, I think there's a combination of running trading strategies in the old way, where you actually are fine tuning algorithms and doing that kind of thing, but you're also taking advantage of this new landscape where you can almost like kind of play the landscape, if you will, and to maximize the amount of like rewards you're earning across the landscape. Which honestly, that's also how quant hedge funds operate in the traditional world as well. When they arbitrage between NYSE and BATS and NASDAQ and all the other places. So in some ways, it's kind of like I think the way I frame it is more like you can trade in the traditional way where you only have access to like the broker API, or you can trade as like a more like as a participant in the whole system, where you can be like you can trade directionally, you can trade by providing liquidity, you can trade by arbitrage, but because you can play every facet of the system, it just gives you more ways to make money.
That's what I was thinking of. Some way you could like use Tellor. So like we're working with some prediction market protocols. You could have like predictions on like what's the percentage of chance of an airdrop, and then you like go and position liquidity in a Hummingbot way.
I do think there are ways to do that, actually, because I do think ultimately Hummingbot, unfortunately in the early days, it was mostly Coin Alpha who wrote all the code. But because now we're trying to really turn it into a community-based project, we're really focusing on enabling people to build their own custom strategies. And I think there's a lot of like this kind of stuff where in a year, it should be very easy to build like, some script with Hummingbot and a few lines of Python code that says, go here and, basically run this algo bot. And when this happens, go over there and pick up some tokens by providing liquidity. So it's kind of like that
provide liquidity on rock NFTs.
And or like look at the signal from Tellor and do something over here. So in some ways, I think that we do want to stitch together everything in the market, but we're actually getting a bit too ahead of ourselves. I think that'll we'll talk about that in a bit later, possibly in the second half of this conversation. But I wanted to just wrap up our conversation first and talk about how you transition from working at the CFTC to actually doing startups.
Yeah, so when I was there, they started in 2015 the blockchain working group.
Right.
If you remember, every agency had one at the time. Now it's Lab CFTC, like for fintech startups, and I was kind of the only person that had really heard of Bitcoin at the time, and I was like, yeah, I trade it, and so I jumped on there, and it was really good. Like you had all the big banks would come in, and so if you remember, there was like R3 and what was Blythe Masters one,
digital asset,
yeah, all those like blockchain for derivatives type
enterprise
companies.
blockchain projects.
Yeah, Hyperledger came a bunch, and they would present all of these how derivatives were going to be settled on a blockchain, and it was, for somebody like me who was like into the crypto space, and like I was starting to, like in 2015 I had started to like follow Ethereum a lot, and probably in 2016 I started coding in Ethereum, and I was like, look, like you can do it in Ethereum, like we don't need this setup of the consortium of banks, guys, like what are we doing? And they didn't quite get it. Still,
they're like, how do we make money then?
Yeah, exactly. Like, well, that's not how, and you'd hear like, that's not how the system works. Like they're not throwing it all away.
What do we do all these people and these buildings and jobs?
I know, like, like, God, we can't do that. So yeah, we, after listening to those presentations and kind of building out kind of my own, I left in 2017 to start a derivative startup. So I didn't quite know what it was, but I was like, you can build actually decentralized derivatives. So I left in August, I think 2017, to start my own. Luckily, Ethereum was kind of on a run, so I'd had enough money set aside that I could forego a little bit of salary and start my own thing.
Interesting. So before that, I guess, did you have any how did you get into startups? Did you like read any?
No, that was it. There was
any? Interesting. Okay.
No, yeah, like I asked like my uncle who had he knew a guy. Cool. Like I had like a few calls. Okay. No, like I had no idea how to do a startup. It was.
Did you? So this is part I was curious about, because honestly, the same thing happened to me. And I literally, I was like, this is after I graduated from Stanford too. I spent a year like, twiddling my thumbs, like making business cards, and because I had no idea like what I was supposed to be doing. But I'm curious, like, how did you
I did. I got my business cards, and then luckily, so I lined up. So there's an incubator here.
Oh, cool.
So I'm in Frederick, Maryland. I'm like an hour north of DC.
Yeah.
So, a lot of people commute down to DC, but there's a startup incubator here. We're big. So we have, if you know Fort Detrick, that's like, it's the military's biochem lab. So there's lots of biotech startups actually around here. And so they do some of those. And I was like, I'll go join. And they like, I still don't know if they know what I do.
Right.
But it was a good experience, because like they set me up, and like they introduced me to a few VCs, like local or angel investors in the area, who like 2017, it was just looks of no way. And so I failed at raising money in 2017 for months, and then in 2018 I was like almost ready to give up, but then I got an Ethereum Foundation grant.
So interesting.
I was part of the round one of the EF grants.
That's awesome, actually. Yeah. Was that this was in 2019 or 2018?
This was like January 2018.
2018. Okay, got it.
Yeah, and so then I got a grant, and I brought on my co-founder now, Brenda. She was actually she worked with me at the BLS. So I've been working with her for years.
Got it. And actually, do you remember what the idea that you applied for with that initial grant?
Yeah, so we were looking at doing derivatives, but I wanted to do, it was very novel at the time, and that I wanted to do derivatives on a side chain. And then you would sort of lock the contracts on mainnet and do them over on a side chain, and then you could bridge them over. And so they gave me some research to do that. And if you remember, it was Plasma was sort of all the rage there. So I did I wrote a paper on why it's not feasible, or why it's not a good idea to use Plasma to do this.
Okay, because of data availability.
Yeah, kind of data availability, and then even like just the security of the chain in general. It's you're basically the more, even like I'm not a huge fan of bridging assets in general. It leads to a lot of security holes.
I agree actually, and I mean, especially after the wormhole hack, and I think this is actually one thing that even for our for our token, this is not for investment purposes. Anything we discuss is not,
sure,
everything else. But one thing we're considering, is like our token is running on Ethereum, and we're considering bridging it over to other chains, but I think the number one thing there is security. And I think there's so many bridges now that people don't realize that bridges are basically, a lot of tokens locked in a smart contract with open APIs. And so, you have to be super, super careful whenever we have lots of tokens in a smart contract.
Yeah, no, I completely agree. Like we prefer like if you wanted to go to Solana with value, just sell ETH on Ethereum and buy Sol over on Solana, and then you're only in native assets. So.
I agree. I think that, in my opinion, like token issuers should be very careful about like basically where their tokens are on secondary chains, basically, because it's kind of like the way I think about it is like there's like your primary chain where your assets are trading in, and then there's any other venue where your assets are on. So it could be another chain, it could be a centralized exchange, but it could be some other place where people are trading at. But you're effectively giving your assets over to a third party in order for them to hold for you. And so
like if like we've talked about that. Like if you lock all of the Tellor tokens or half of them over on some crappy chain, then they could potentially steal all of your Tellor tokens. And if they steal them all, now your governance is screwed. And they can vote through whatever they want in your DAO. Exactly. So it's like a giant risk. So
and it's also not just you; it's also your token holders as well. Because
they
a
all
lot of times there's some chains are advertising, hey, port your token over to my chain, and you can earn like 1,000% APY or something.
Yeah, and then they just take your token.
So it's almost like there's almost like kind of like this consumer scam kind of quality to or avoiding, because like on the other hand, some bridges are actually truly useful and so forth. So anyway, this whole bridging problem that we should probably also save for a separate conversation.
That's like a 10-hour long talk you can have with a bunch of people. But
cool. So let's continue the story. And so you got a grant from EF to do this derivatives research project. And then what happened afterwards?
We did the research project, and we sort of launched, trying to get some users in derivatives. This was in like mid to late 2018, and nobody really wanted to use an on-chain derivative project at the time. So it was really, really rough, because it was similar to like early DYDX, like just with the long short tokens, and you needed a pair them on each side. So we had yet to figure out pooling of the funds and using a token to incentivize it. I think the token incentivization is huge. For bootstrapping liquidity. But we had sort of failed at doing that. But over the time, like we had been doing this research into like the biggest problem, if for derivatives, is your oracle. So if you're betting on the price of Bitcoin, who gets to say what the price of Bitcoin is? And in 2017, 2018, even 2019, like there was nothing. Like it was people were using, if you remember, Oracleize,
yes.
it was like literally a guy running a server over in London. So you would like you would say like, can you go fetch this API? You would pay him a quarter worth of ETH, and you would put the value in your smart contract. And that was like what financial contracts were running on.
We actually had $600,000. We were managing a $600,000 hedge fund on the blockchain that was fetching essentially a portfolio NAV using Oracleize every day.
It's crazy.
But the thing was like, it was just massively complicated smart contract. You couldn't debug it. And it was like, I'm sure it was, I didn't know it was one person. That's actually even scarier.
It was like him and his dad running a server over in London. It was like, yes, it was crazy. So we had an idea for like, why don't we actually just create an Oracle network? And then we jumped into, we had this idea for like,
Nice.
it was originally like a proof of work Oracle, that like, why don't we just get back to how can you have an Oracle where anybody can participate? So that was like, if you actually want it decentralized, you have to have it to where anybody can be a validator, and then anybody can sort of dispute the values. Those were like the two things. And we came up with an idea, and so we were trying to create it while we were at Daxia. And we had run out of money like several times along the way. Like, so in early 2018, we were kind of out of money before the Ethereum grants. And then in late 2018, we ran out of money, and then we got a consensus grant, which kept us going. And then,
and was that how big was the team during those?
This was me and Brenda, and then another guy, Mike, who he says hi. He was another. He was kind of the non-technical founder, I guess you could say, of Tellor, and then we ran out of money in early 2019, but luckily we applied to another incubator. We applied to Binance Labs, and we got into Binance Labs in 2019. Their 8-week accelerator, and that gave you 250 grants. That was like, more money than we had ever dreamed of. So it was amazing. And then we went out to Berlin, and we launched Tellor then in August. So we built out the MVP and quickly launched it, and we had a token. So we didn't give any to ourselves. We started at zero, and we minted upwards, and we got a 10% dev share. That was like the whole model for the Tellor token.
Got it. And it sounds like, so Binance Labs was like the key kind of like, kind of like the investor that kind of like gave you the capital to launch Tellor then?
Yeah, for sure. And then, I mean, they said we were supposed to be able to raise money afterwards, but like, we pitched to, I swear, like, if you name a VC in San Francisco, like I pitched to them, and like really? We didn't raise any money.
When was that? When were you doing the pitching?
2019, mid 2019.
That was when I was doing a lot of pitching for Hummingbot too, without a lot of success as well. So
it was like I think we hit triple digits on the nose. It was like literally like we got really good at the nose.
Were you getting intros to all of them, or was it kind of like
so we were at Binance, so Binance gave us a lot of intros. They were really helpful. And then like it was just like, usually back then, even in 2019, it was all about like, so we had a token, and everyone wanted to know, okay, you're a token with a Binance connection. When's the ICO? What valuation can I expect to get in at? And we're like, we're actually not doing an ICO on Binance. That's kind of shady. We're going to try and do it in a more honest fashion. And they would just like look at us like, what are you talking about?
Because they wanted to like get some insurance of kind of being able to sell the token at some higher valuation later on.
It was like ridiculous. I mean, every single VC you talk to, like we talked to tons of Asian ones, and it would always just be like, what valuation can I get in at? What's the lockup period, and what valuation can I expect, and what are your exchange partners? And they would literally just try and flip these tokens in 3 months.
And so my read of that is I've been in the Valley for almost 12 years now, and I think my read of that is that before really 2020, there was no established like model for how tokens actually acquired value. So like, through actually doing useful work. So it was kind of like before that, people like the only reason the VCs really invest in tokens was almost like it's a very short term, price appreciation gamble. Basically, they weren't investing as VCs. They were just kind of like basically using the reputation to get in deals where they could basically make a guaranteed profit almost. And that was like essentially the landscape prior to 2020. And then I think what happened in 2020 was that you actually had tokens that actually proved that they were actually really valuable by themselves, like Uniswap or like Axie and tokens. Well, okay, we can get this later on, but I do think that there's a difference between finance fundamental value and kind of like market perception value, but ultimately that might be the same thing.
But it was we sort of failed, and then luckily, like we had the token and we got our first listing on an exchange. We got on IDEX because we were friends with kind of Alex and the team there, and we got listed. It was like we got listed in October of 2019, and we were
So actually, maybe before we kind of get into like this part, like maybe what was the can you explain the value of the token and kind of like how it plays the role in the token in your Oracle use?
Yeah, so I'll just tell how it works now, and then it worked very similar back then. But so Tellor's a network of data reporters. So Michael wants the price of Bitcoin. He would come on our network and he would tip, we call it, for the price of Bitcoin. So you would have a query ID, and he would say, "Hey, I'll pay 1 TRB, that's our token, to anyone who gives me the price of Bitcoin." And then anyone is allowed to submit the price of Bitcoin. All they have to do is be a staked reporter. So they would stake in our contract, mainnet Ethereum, it's 100 TRB. They put that they lock it up, and now they're allowed to report on the price of Bitcoin. So somebody would come in and say, "Hey, it's 50,000, whatever it is right now." And you can use it or you can dispute it. So anyone can actually dispute it. So they can say, "Hey, if for instance I said, oh, the price is $10 million, you wouldn't want to use that." Somebody would probably instantly dispute that and say, "Hey, he lied." Then it would go to a vote as far as whether or not I lied, and the person that caught me would get my 100 TRB.
Got it. And just one question there. So does it start with someone requesting a price?
It doesn't have to. I mean, it's just well, anybody can just, so basically, as long as you're staked, you can report data whether or not somebody paid for it or not.
Right. And as long as someone reported something, then someone else can challenge the veracity of that. Okay, got it.
Yeah.
And what is I guess what is my incentive as a challenger to do that?
So you would get my stake.
Okay.
You're right.
Got it.
Yeah, and usually it's the other. So almost every single time, it's the other reporters. They all just compete and they dispute each other really fast.
Okay.
But
Got it.
and it can be any type of data. So it can be, it's just a random byte string. So if you want the price of Bitcoin, if you want, information about a Bitcoin block hash, if you want, weather data, whatever, a string, anything, you can put on and dispute it. So
got it.
The token should hold value because basically, if you have more people staking, it should go up, and more people requesting should be this kind of utility token type thing that people hold.
All right. And yes, and before we get into, I want to get into later on kind of how it's doing now and kind of what the metrics are and everything else. But before we get there, let's talk about kind of the early days. When we first listed in the early days, did you have the same model back then as you do now for the token?
Yeah, roughly similar. I mean, the network, we were only like numeric data back then.
Right. So basically, it sounds like the chicken egg problem you have to solve is kind of like getting a network of reporters and plus people who are verifying each other, along with a network of like consumers for those data. And when you first launched, like, who do you think the consumers would be for the data?
So you were hoping, we were building it originally for ourselves as a derivatives protocol. So we thought, a DeFi protocol who needs data could use us. So yeah, that was what we were hoping to kind of get off to. And since similar to like Bitcoin, so we did the minting. So that's like we started at 0 and we still have that. So like we have a block reward. So every time, we call it a time-based reward because basically every time somebody submits, it emits right now every 5 minutes is half a TRB, the inflation rate. So
right. So that's like the block reward for participating in the system and getting the got it.
Yeah, it keeps it live, and then it grows the supply and helps pay some reporters.
Cool. So kind of going back to the story. So you listed on IDEX, started this Oracle network. How did the early days go? And what? How did it go?
Even pre IDEX, like we had launched in August, so like 2 months, and we were trying to get people to report it. Like I had just written we had like a reporter written in Python that I wrote, and you would tell people like, listen, like we were trying to charge like $3 per token, so it was trying to get people to pay us OTC, and it was tough to get people to pay like my friends, I would like give them tokens, like just come
okay.
mine it with me. And, people like you would give them tokens, and then the network would stall up because, back then, even gas, like if you were submitting like every 10 minutes throughout the day, it would cost you like $20 a day to report. So
Even
like
back
people
then,
were like,
because gas would be up and down, and
so it would be $20 all day. So you're submitting all day, and it would be like $20, and they'd be like, man, like I'm running out of money. Like I can't do this to get these tokens. And, they would be getting, hundreds of TRB, but it doesn't matter.
Like and were they able to sell the token on?
No, they weren't.
IDEX
No,
or other
like
exchanges?
some people, there was like a slight OTC market, but they were mainly just holding them.
Okay.
And that, because that's like whenever we listed an IDEX, the token price quickly tanked. Like it just, all the reporters who've been stocking like just dumped it. So we went down to like 2 cents in November. It was just brutal. And like we had predicted that, because like people were like, there's no liquidity as far as buyers go. And I was like, guys, like we're just gonna let it go. Like let it tank low and get these guys out of the system, because like it's we're not buying them. It's not we don't have the money. So so we let it go really low, but then we had some sort of, we were running out of money then anyway. And then luckily something came through. I think we like got on a podcast, or like it was, we had just things were starting to look up, and the price rebounded from 2 cents in November, and it hit a high of like $8 in December.
In 2019?
This is 2019,
2019, yeah.
And so it hit like 8, and then like we're like, oh man, like we can pay our salaries off of tokens. Like this is amazing. Of course it was like, just like with the bare bones, like the three of us essentially doing it, but it was good. And I mean, that was like, we were only on IDEX and DEXs until like the following August. So like for the whole first year, it was just DEXs, and it was actually a really good community back then. Like, not that it's not a really good community now, like, but we had a really good, strong base, just because anyone who wanted to get our token either mined it or like bought it on a DEX. And, if you were buying on DEXs in 2019, it was
your early users.
These were early users. So I mean, almost all of our users all of our community was these early like people interested in reporting, early DEX users, and I think it helped us out for sure, because you saw like you would go to other communities, they would be like an ICO on Binance, for instance, and just be a completely different feel.
Like
the Telegram chat of an ICO on Binance was just really, really different, even if their market cap was higher. Like we had kind of that gritty
and I know what you mean, because we also had a very similar kind of very niche but kind of like successful community early on at Hummingbot, because it was just we were just a trading bot project, so we didn't have a token. We weren't on we were an ICO, and so the only people who came to our Discord were people that just weren't interested in building open source trading bots. So so I think even today, I think that ethos still carries through, and I think that's kind of, I would say, one reason why it's kind of like, I think the communities that start smaller and just built it up and have a more native culture that people want to join, as opposed to ones that just like start with like 20,000 people because they were imported over from some Telegram group.
Yeah, for sure. No, it definitely worked out well for us, but that was those were the early days, I guess you could say.
Nice.
Lots of other
and so
stuff
did you have do you have like derivatives protocols actually kind of using your oracles, or like
back then?
Yeah, back then.
Not really.
Interesting.
Probably back then, like you would have a lot of one-off projects. Like we still kind of face this problem today. It all comes down to like, how much do you want to talk about the projects using your protocol? Because like what we found was, so like our biggest competitor, was Chainlink. They're the big Oracle, and they sort of made a name because they would put out a partnership announcement with like anyone under the sun who like said that they might want to use Chainlink. Like they had a partnership, and it looked like they had thousands of users, and we like looked, and we're like, especially in like 2019, we're like, there's not thousands of users on this whole ecosystem.
But they had a lot of Link Marines,
Yeah, no, but we're like, like if there were 50 actual users, like we're like, that would shock us. and there weren't. It was just partnership announcements, and we found that too. You know, people would come to us and like, hey, can we do a partnership announcement with you? And we're like, no, like go write some code, man. Like let's integrate. And then you had a bunch of, you know, Ampleforth started then. Now Ampleforth is a user of Tellor, but back then they weren't. But like Ampleforth forks became users of Tellor.
Okay. Yeah.
So like you didn't, we were like, you know, like they could create a price feed on us, and they could have a price feed for their own token. And it was like, oh man, like, do we want, like, you couldn't even tell people because you didn't want to point to the fact that a lot of these scams were, you know, running off of Tellor oracles. And even still, you know, like, so like whether it's a fork or some scammy project, it's like, how much do we want to say even about it? But it was fun.
Cool. So when did, I guess, things start to change? I guess.
Yeah, I mean, well, it's super different. You know, like I've noticed with like the price of the token and the actual usage of the token are just completely separate. They're, you know, like we can have a phenomenal month where we get a user or two, and you know, like we move to another chain and things are great, and nobody cares. Price goes down, and and then you get like an exchange listing or some podcast tweeter, you know, likes you, or you have an up month for ETH, and then your token price goes up. So like talking about like actual usage, it's been really, really slow. You know, we generally like our two biggest users now are Ampleforth and Liquidity. Liquidity is a stable coin. And then probably just recently we've gotten, things have really changed for us as far as just volume of requests to use our Oracle once we went to Polygon, to be honest.
Right.
In later 2020, I mean, gas prices had choked off most of the innovation kind of on Ethereum.
Yeah, that's right. So actually, maybe let's talk about some more, because I think you and I know about this, but I want to make sure everyone in the audience kind of knows about this. That because you know, originally what you described was there's already seemed to be a problem in terms of reporting transaction costs even before gas prices really spiked, and then you know, starting 2020, because you know, everyone got excited about you know, liquidity mining and yield farming and all this other stuff. You know, gas costs just were crazy. So so how, I imagine that must have prevented people from doing lots of reporting on
what just becomes a slower oracle. You know, like people don't realize, like, so if you have an oracle, that means somebody has to write and put that information on chain. So for us, you know, that's like right now, depending on gas prices on Ethereum, which are some, like at peak times, it was between $50 and $100 to write a transaction. One transaction. So if you wanted one value on chain, it's going to be $50 to $100. So like if you want an oracle that updates every hour and it's $100, like that's $2,400 a day to have an hourly update. So
and because it's more expensive to challenge as well, it's probably going to result in less secure and more.
It's not a good system. It's not as good. And you know, we always have been pushing people like use slower oracles. Like don't, you know, because a lot of times people come and they're like, we have this derivatives protocol with 100x margin. We need an oracle update every minute on chain.
Like 10,000 TPS. Latency.
And you're like, you can't do an oracle update every minute on chain. Like, not to mention finality issues, but we've told that to so many people, you know, so like we tell people like try and build use cases that are, you know, fit what should be built on Ethereum and stuff. And it's kind of an education thing, because if you assume like, you know, once the oracle, that's another sort of nuance of Tellor where like Chainlink is different. So like Chainlink, there are no disputes. Like once Chainlink says this is the value, you can use it. Whereas Tellor, you know, we put the value on chain. You actually don't want to use it right away. You want to wait 5 minutes or check it to see if somebody disputes it. So like we tell people you sort of want to add that delay in even. But it's just been a big education game for us. But gas prices, we're telling people like, oh, you have to pay for an oracle feed. Like, you know, if you want this updated, you know, like luckily like, you know, like Liquidity, it's every few hours. It's a doable use case. Ampleforth, it's just once a day. Those are good use cases for oracles on chain. Whereas things that you really need updates fast, it's just super hard. So
Yeah. So yeah, I definitely agree with you on layer 1 ETH. I think that kind of like slowness is almost necessary to make it work.
Yep.
But as you mentioned, you move over to Polygon. How tell us about that experience. Like, what was it like moving moving to Polygon from a technical perspective, and also getting users on Polygon?
Well, from a technical perspective, we sort of like redesigned Tellor, so we, we made it just to be not as almost to where you could port it to different chains, and the security would sort of still stand.
Because your security transcends the different chains, or is it?
It does not. So it's per chain. But you had like the bigger differences, like you had to sort of make it a custom staking amount across the different chains. So you could have tellers like the way where you stake some value and then somebody reports and you can dispute it. You could do that with Matic token, ETH. It doesn't have to be TRB. You just sort of were using TRB to sort of give value to the network. And the problem though is like if things, if you have 100 TRB stake on mainnet, you can't possibly have 100 TRB stake over on Matic, because if over there you could report once a minute, that's okay. Right. But you don't want people to have to stake 100 TRB per report, or else you're going to have some crazy amount of, bridged over there, which isn't going to be good.
Got it.
So we had to just adjust some things in that sense, make things a little bit more custom. But it felt, whenever we went over to Polygon, now we're actually we're moving over to other chains as well. So we're moving over to Harmony, Cosmos, Algorand even. Polygon in a lot of ways feels like kind of like early ETH, where people are just like, you get the people who are just like building projects that aren't VC funded and that aren't like, these giant things. It's just like, hey, like I'm in my spare time building this project and I need an Oracle and I want to launch it and see what happens. Like, and those are really fun ones to get. And you get that like sort of just builder mentality about, hey, these are like real people trying out and building cool projects. And that's sort of the vibe we get over there, which we love. That's kind of how we started out on Ethereum. And that's where we think, a lot of because like on Ethereum, it costs you a few grand to launch a smart contract, you got to be pretty serious in the space to do that. So, whereas over on Matic, if you wanted to just launch this little app, you can do so and launch your token for, 10, 20 bucks and you're off and running.
So for users who might actually need an Oracle, so we actually work with a lot of decentralized derivatives protocols and exchanges, who are trying to build their businesses using Hummingbot in some way. So I imagine a lot of them are looking for oracles. And so how do you think about how Tellor differentiates from Chainlink and other providers in the market?
Yeah, I think some of the bigger pieces is, we've been around, so we can differentiate ourselves from a few of the newer guys. But the biggest thing is just kind of that focus on decentralization, where we've been trying to do it right since the beginning. Chainlink, most of the other people, they have, whether it's a straight up whitelist or admin key in there. It's just not sort of the mentality that we go with. So I'd say, it's really comes down to just that, like, you're not, it doesn't make sense. Like, a lot of these Oracle schemes seem very like Rube Goldbergish underneath the hood. Like, it's super hard to figure out exactly how they work. And we're not trying to be that. We're trying to just be it's a simple crypto economic protocol. You put value on chain and it can get disputed if it's wrong.
And personally, I do think that I think the multi-chain approach is going to be really interesting, because what I see now is that people are able to start their businesses or their NFT creator empires or whatever it is on different chains, and these chains have different advantages and disadvantages, but ultimately they're kind of like all like competing to be technology ecosystems, if you will. And so it's kind of like, I think there's room in the market for many kind of like internet ecosystems or blockchain ecosystems. And so if you kind of think about like coins from that perspective, rather than as currencies necessarily, that people have to like every person in the world have to spend one currency or one or two currencies, then I think that mental paradigm allows for a lot more of these potential winners out there. And so what I see now is that we see new developers coming into our ecosystem, and they're building dexes on Polygon, they're building on Solana, Harmony, Cosmos, and it's kind of like this like Cambrian explosion of activity across different chains. And I think it's less like who's going to be the winner, but more of like, how do we get more folks, building startups in this Web3 world as opposed to the Web2 world?
Yeah, I mean, knowing, like, I mean, I even remember like back in whenever you, or maybe you do too, like whenever you're looking at coins, like I came to it from like a libertarian perspective, and you sort of care about decentralization, but knowing which chains are decentralized and which ones are actually being honest about their claims and stuff, that takes so much time, people at first just want to build on something that they can build on, and that's easy, and that they can get off the ground and run and see if this thing even has any legs. So no, that it's really something that we're trying to do is just make it easy to build on a lot of different chains. And until we get to that multi-chain world where it is really easy to build on a lot of chains, there will kind of be these, I think, these one-off winners, flavor of the month type stuff. But
I mean, the resonance from how we approach the world too. When we first started, there were like a lot of like commercial, kind of trading bots out there. There's some open source ones, but a lot of them were like open source ones that, kind of like try to kind of like make money off the users, kind of, if you will, instead of actually trying to make money by being open source. And so I think we, luckily managed to figure out a model that allows us to be sustained humming bot without just like scamming our users, so to speak. But it took a long time to figure out, and we're still trying to figure out how to like manage it in a truly organized, decentralized way. But my kind of a read of the market is that I think that the more decentralized, the more like honest projects always win out at the end of the day. Because when I look at like Ethereum is probably the best example, but even a lot of projects that have, I think, kind of like just really just focus on building instead of focusing on raising a lot of capital have actually done better than the ones that just raise a lot of like VC money and just I don't know what they've done for the past few years, frankly. But
no, I mean, just getting, I mean, even like a startup mentality. Like I tell my people, like, now we've slowly grown the team, so we're like up to, there's 12 of us on the team now.
Wow, that's great.
So nice. It's a whole different thing.
And be sustained full time by this token DAO or what do you call it? Like, what do you call this entity you're building?
We call it a DAO. It's definitely DAO-ish now. And it's eventually that's like one of my goals is over the year to fire myself and just take money directly from the DAO versus Tellor Inc. But that's coming. No, but something like I think a lot of times people in the crypto space treat it. I always like to, since I've kind of done it a lot, like just get it out the door. A lot of times, like you'll see a lot of these startups who like take 2 years to build, and it's like, no, like just they'll raise VC money and then take a year and a half to launch, and it's like, what are you guys doing? Like, just try and build it and get it out the door. Like don't try and hype it, and hopefully there's not, like, make sure it's secure. But like we've learned so much, like even just what do your users actually want? Like trying to build with users for the past 2 years has been the best thing for us. Like, because we wouldn't know like what type of data do they want? How do they want, how do they want to put in their smart contracts? How can we talk to it and make it easier for them? So that's something that we've definitely done differently, I think, is just
interesting.
Really just hashing it out. And, any sort of product we do, we just try and get into the hands of people who want to use it and see if they even like it.
And that to me is the first word product. Just get user feedback and on exactly what you wanted them to use. So I guess, like, what have you learned, I guess, about this Oracle problem over the past couple of years, and seeing the growth in the market? Like who are your users today? I guess
I mean, the bigger thing, now recently, so within the past 6 months, we've switched from just numerical data to any type of data. So like expanding that and sort of telling people about that, so we've gotten some people trying to build like cross-chain AMMs and like bridging stuff you can do with oracles. And those are definitely, I think that's kind of the next, I would say like the cross-chain AMM space, now I think it's like basically Thorchain. that'll probably be like the next really big one.
I see. Is that for non-numerical data or for numerical?
That's a non-numerical data. So you got to pass over like hashes of other chains and stuff.
Interesting. Actually, can you help me with because I don't quite understand the use case there, like for kind of passing hashes across different chains.
Well, it would be like a Merkle tree of different things about what's locked in the contract, and
I see.
Who does it go to? What specific address does it go to?
So it's more like I see. It's more like the that kind of data about.
Yep.
It's more like the account data, basically, or trade data. Interesting. Okay.
And you could pass it over individually, but yeah.
Got it. Okay. And basically, because like I guess the alternative is you have to use some protocol that's gonna like check all the blocks and do all this fraud verification.
Well, that is what an oracle does, right?
Right. That's true.
Yeah. Just take it all off chain.
Yeah.
And that's like Thorchain has oracle. I don't know if you're familiar with Thorchain too much.
Not really, actually.
Yeah. But yeah, so they're a good decentralized AMM, but they have they have kind of a whitelisted group of node providers at the moment, and they're expanding it. They're a great project too.
Right.
But until they can sort of get past that, it's really, really hard because so you can have like let's say you have Ethereum on Ethereum and you have Matic on Matic, you can pool them on both sides and then have an AMM built out of it, and just pass it back and forth. And those kind of pools are going to be really important. I think that'll be the next big.
The whole this kind of goes back to our bridging conversation from earlier.
Yep,
because
exactly.
There's so many alternatives that are vying for how to basically get assets from one chain to another chain. Really,
how to get value,
or value, whether you're moving assets or not, but it's getting value transferred from one chain to another chain. So I think it sounds like actually sounds like basically like so you think your oracles could be a very important piece of helping whether cross-chain dexes or bridge protocols or basically affect its transfer.
Yeah, and I mean the other thing I think that we still haven't seen too much used is you don't really see too many synthetic assets like at least that are created really fast. Like I know some people trade some synthetic stocks, but you don't really see them traded as much as crypto assets. And I don't know when we'll start seeing that. But like that's what we're starting to work with a protocol over on Cosmos, and they're doing commodities exchanges, and like we were like hitting ourselves because we weren't up and running quite ready, but it's like the whole nickel price explosion, like how fast can you spin up a nickel contract and let people play around in it?
That's true.
So I think those kind of assets are really kind of underrepresented still in the.
I agree, and the other thing is that I think a lot of people are trying to build all kinds of like new layer 2 exchanges. So any perpetual exchange is going to need some type of index for the funding rate to look at every hour or so. So I think that the more basically anytime someone wants to do any type of derivative, they're going to need an oracle.
Yep.
And so I think there should be, and I think right now, my perception is a lot of them are just using Chainlink, or a lot of them are just centralizing it and using like the CoinGecko price feed or something.
Yeah, I mean same difference, but it's you'll see that, or another popular one recently is some people will try and do if they need on-chain assets. A lot of times they'll use like a Uniswap feed. Which using a spot price on one exchange is always a bad idea for your settlement price. But no, that's what we've always said for the longest time. Like just beating down the narrative of a centralized oracle is like our hardest job. Like don't demand that your projects have a decentralized oracle, and Tellor will be just fine. And I think they will eventually. So.
Yeah. So just to reiterate, do you think that do you think your users need to value decentralization in order to pick you guys over like a more centralized alternative, so to speak?
Yeah, I mean it's easier. Like anytime you would use it, which is to be honest, I'm excited for like more of the bear market, if you will, because it's if you're still building on it, like. To be honest, like if you're building on Ethereum or one of these networks in general, you sort of value decentralization, or else you could probably do it without building a startup on one of these networks. So you probably value decentralization, like make sure that it's decentralized all the way across. And that's just what we have to get across to people.
Yeah. And I think part of the challenge is that when the data is just purely numerical, it's kind of like it is possible to like, the alternative is like looking at Uniswap or something like that, and kind of trusting the market to do its job, and allowing the market to like get the price in line with where it should be. So I think that's kind of like the theory, so to speak. But I think where it breaks down is actually, in my opinion, I think the non-numerical data is actually more interesting in some ways, because that's kind of stuff where it's like a binary, like, is that true or not, kind of thing that you can't kind of like automate using the market.
Yeah, no, completely agree. But I think the other thing with Uniswap, to say probably the biggest problem with Uniswap oracles is kind of like I was talking about in normal futures markets. It's that there's probably 5 guys that control it.
Right.
Who are your liquidity providers? And, I don't know if that's something we necessarily talk about.
And I think it's where like the use case comes in, because it's kind of like, I think that makes sense if you're like, let's say, running a decentralized exchange and you want to use an oracle that you want everyone in the market to trust, and so you want to have a more decentralized oracle. But I think to me it's more like the majority of your users should almost be like any users that just needs like an oracle, right? And they can run some type of on-chain process using that reliable, trusted thing. And so that's where it's like, I think currently, because it's like, it's easier to use a centralized oracle for that person. That person, you kind of like, in my opinion, I think the average user, it'll be hard to convince the average user to like, hey, like you need to worry about decentralization, therefore you need to do extra work. You know what I'm saying?
Yeah.
But I think for the protocols, like anything, if you're creating something public, then it makes sense that you should use the public.
Yeah, and I mean, it's always tough because like a lot of times these protocols, they'll launch with admin keys, and the team owns 95% of the token anyway. So like telling them to care about their oracle is like, guys, we have other issues.
And I think that is the hard part, actually. It's kind of like and that's where I think that's why I like your strategy of exploring the non-numerical data, because it's almost like that's opening up new use cases that allows, let's say, someone to actually make money or do something they couldn't do otherwise before.
Yeah, no, it still comes down to a lot of the decentralization pieces, and it's something we're going to be harping on for hopefully years to come.
But I think to me, that's why I think projects like yours make sense to do via token, because it's almost like both you guys and Hummingbot were almost like we're like non-profits, in some ways. That we're trying to use a token to make sure, and the role of the token is first and foremost to make this project sustainable. And like, because there's a model out there where if people do X with a token, then Y happens, and there's some flywheel effect occurs with the model. And so to me, it's like, I kind of going back to what you said before about you pitch 100 VCs and they were they didn't understand it. I think that's where it's kind of like, because VCs are their incentive is to take a lot of like pension fund money and invest it into like 10 startups every year, and because of that, they really can't, they aren't designed to take a lot of risk in new things. And so even though VCs are the supposedly the early stage startup investor of choice, in Silicon Valley and by extension the world, just because of their mandates, because of how they're incentivized, they can't take a lot of risk on really new things. And so to me, I think the ability for like for you guys and us to kind of like have this token out there, and the token is actually kind of trading, and it's able to sustain like the long tail of projects. And honestly, that to me is like the innovation in crypto.
Yeah, no, completely agree. Like I think, I'm all for lots of community type currencies and these sort of just the idea of printing money to kickstart an economy it's just insane. And then it just how we sort of use it to align incentives even going forward when it comes to our marketing or when it comes to paying for security. It's like the most powerful tool that's completely unexamined in the real world.
And I think one issue is that right now I think the market only has a very like a beginner mentality when it comes to like the models for tokens out there. You know, right now there's Bitcoin, which is really just like, you know, just a price, really, just a price, and it doesn't do anything. It's just, you know, the price just reflects supply versus demand. That's it. And then I think for the layer one protocols, people have started to appreciate that. Yeah, it's a unit of a kind of a medium of exchange using this protocol. The more, you know, startups, the more transaction volume that happens in this ecosystem, the more valuable this thing happens. So hopefully that over time, Ethereum, Solana, and, you know, Binance Smart Chain and other layer one protocols start trading on that basis. You know, for the DeFi protocols, I think we've kind of gotten to a point where they're kind of trading based on TVL or total value locked. But for everything else in the market, it's kind of like finger in the air.
Yeah. No, I mean, TVL is even a finger in the air thing. You know, it's a completely gameable metric too.
True. Yeah. But I think in some ways, like, I guess because I'm a student of finance, I feel like the history of finance is all about finding some metric, you know, and then after a while, everyone can game it. And then finding like new metrics.
TVL in my mind is completely useless now. I think it was useful back in the day.
Why do you think it's useless? I guess.
No, I think a lot of protocols game it. I do. I think.
They get all their VC friends to put their tokens.
Very much so. No, I mean, even like you go back to Uniswap and like, you know, how that airdrop was handled. I mean, you saw the volume on Uniswap pump before the airdrop. Right. Who was that? Yeah. I mean, everybody knows who it was. It was the VC round that they raised right before there. That's who you would guess. And so you see a lot of similar things happening. I mean, like Synthetics is like a great example. I think at one point they had like $700 million worth of SNX locked in their system. And it was like, then they had 15 users a month. And it was like, what on earth is going on, guys? Like, is it actually a metric? No, like, but it, you know, they would push out that metric, or, you know, like Chainlink would even say like, we have, you know, X number of dollars secured in Oracle. Like, what on earth does that mean? Yeah. And you look and it's like, well, and then you would ask them like, well, is anybody even paying for it? And they're like, yeah. You know, so like, is it a business? Is it just dollars secured? Like, what is it? So yeah, finding the real metrics are super hard, especially whenever these things like, you know, if you have like a really gritty team that's going to stick it out and build a project and pivot if things go bad, like the token might be phenomenally valuable. So it is much more about, you know, what is the ecosystem you can build around this thing versus even, you know, like a TVL, like a TVL on Uniswap could be gone tomorrow. If there's no community actually backing it, does it matter? Probably not. Like, and I would say in that sense, like maybe a Sushi Swap has a stronger community than a Uniswap just because they seem grittier and might stick around for the memes. I don't know.
Yeah, well, unfortunately, I think they kind of blew up recently because of some kind of, you know, thing.
Yeah, well, yeah, they had a bunch of internal drama, but I don't know. Does that make them stronger? Does it? Well, they
could have come back actually. Yeah, but well, yeah. So, but to me, I totally agree with you. Actually, it's like, to me, I think it's more about community. It's kind of like, can you create an organic, real, growing community or not? And, you know, maybe raising VC helps you, maybe it hurts you. So, you know, it's more just like, but it's like more about, I think, about the founder, the team, and like, you know, do they actually have the, you know, kind of like, are they actually going to find something that works and run with it?
Yeah, I mean, like how, and then the biggest thing is like, how can you get actual people to care about your product? Like it's, you know, not just use it to make some money quickly, but like to care about your product, and that's like those are the hard people to find, and they're like the gems in the space. So
yeah. No, I totally hear you. So before we end, I know that I know you spent some time, you know, with both at the CFTC and other regulators, and I know you're also involved in some other regulatory stuff right now. Do you want to talk about that and kind of like, you know, kind of like why you're doing it and what that's trying to do?
Which is educating the regulators in general.
Yeah, educating regulators.
Yeah, no, I think it's super important because I think, you know, when I was there, you realized like, how much they actually know, and sometimes it can be, sometimes they do know enough code to realize like whenever you're BSing them, but especially the higher up people don't know a whole lot at all. And when you look at how rules get made, It's a lot about sound bites and a lot about just making sure that they get it out the door without a whole lot of thought on the matter. So just educating them to make sure that they make the right choices is super important. Like I actually just gave a talk on this last week. So last Tuesday I did a it's up on our YouTube, but we can try and find it. But it was on prediction markets and oracles and some of the regulatory issues around there. Because if you saw, there was like the poly market case where they settled with a prediction market recently. And there's just so much up in the air. Like it's like impossible to regulate it at this moment because, they said like,
I can empathize.
Yeah, like like Polymarket was let's say you're betting on, let's say you have a decentralized prediction market and it's betting on the price or the price of Apple stock. So they Polymarket ran the website. That was their first mistake, and that was in there. And okay, so we know you can't run front ends, like that's out. But then they pointed in the action was they were talking about their resolution procedure, which they knocked them for being centralized, meaning they use a centralized oracle for resolving the price. And so the question then comes in is like, okay, so if that's bad, you can't be your own oracle. Well, what if you give it to another centralized party like Michael Feng? Is that okay? Does he have to register? Who has to register? We don't know. Okay, not Michael Feng. Chainlink. Chainlink Inc. whitelists everyone. Are they reliable? Are they, who gets sued if there's a contract error? And then, does Tellor have to register? Who has to register? And those were, I think a lot of those things, that's sort of how the market plays out, is like, this is illegal if it was centralized. You can't use a front end, but then if you're decentralized enough that it's going to be a headache for us to charge you, we're going to not charge you. But, so just trying to get some sense made out of the rules is one of those things, and getting them to think about the right things. Like, to be honest, I'd rather just, I think it's important, like, not to rush it either. Like the regulations, like I know a lot of times people want rules written really quickly, but like, we can be honest, like despite the clarity in any of the rules, like they haven't cracked down on us here in the US. We're really, really lucky. And I think just making sure that they understand, like there's a whole lot of nuance to this. So move slowly and just, because like if you could imagine like what sort of law they would have enacted in 2013, 2013 was like the first Bitcoin meeting at the CFTC. Like, what sort of rule would they have made in 2013? Like, and it probably wouldn't be good for Ethereum or any of the other ones now. But so I like to just tell them, like, move slow, think about it. Go after fraud. There's plenty of fraud to go after, but leave people alone.
Yeah, no, I actually think it's really important to have like people like you who actually work there, who have some credibility because you know the people there who are kind of giving in and basically saying, hey, now run a startup in the crypto space, and this is what we do, and it's not every startup in crypto is a scam.
Yeah, no, it definitely helps them. I think just knowing like, and that's why like I tell people like just go meet. So you can like go on their website and you can schedule a 45-minute call with Lab CFTC now.
You can.
Or
okay.
like you can just
that's interesting because my lawyers have always said don't do that because you're like somehow giving away or you're using even information that you might regret later on or something.
No, I mean that's the other thing I realized. So like the CFTC, like they don't talk to each other. So like Lab CFTC, you can get some information, but like
interesting.
The guys over enforcement and the researchers who might be on the call or something like that. Like the only time we talked was like we would go work out at the gym in the basement.
Which is natural. It's a huge company, so to speak. It's like
exactly. Like you would actually like sometimes like you'd be in a meeting and you're like, hey, you worked on this too? Like I had no idea you knew anything about this. So it's definitely, you don't have to worry about that. And no, the agencies are, the thing I tell them is like, and you see it in the space, like that's why the big protocols are always the ones hiring lawyers. Like, I mean, the CFTC fined like probably the top biggest banks more money than the entire market cap of crypto last year. Like you guys don't have, like, they're not worried about your, you know, couple $1 million protocol, like as nearly as much as you think they are. It's just,
and actually, I think in some ways the law firms almost have an incentive to like kind of like, you know, try to always be the intermediary between what the founders do and what the regulators want to do. And so it's kind of like, I think that's why my advice to startups is always like, take advice from your lawyers, but ultimately recognize that you're the one that make that decision. And so if it sounds fishy or if it sounds weird, hey, maybe you should just do this. Make sure you ask questions and make sure you tell your lawyers, explain why instead of just following their advice.
Yeah, no, and I remember like for a while, like before, I think it was like before I left the CFTC in early 2017, I walked around with I drew out a picture of a CDP, so for MakerDAO, and I was literally walking around with like a Word document picture of a CDP that I drew out, and I was like walking to the different lawyers, and I was like, what is this? What product is this? And like every lawyer had a different answer at the CFTC. Like we were just trying to it looked like, I think we settled on it looks kind of like a swap. It would probably be regulated as a swap, as I would explain it. But it was like, nobody knows. Like you could ask two guys at the agency and they'll come up with different answers because the rules are just that opaque. So
ultimately the rules are designed for a system that's no longer fixed anymore. It's changing. And so it's just like, you can't just look at the past and be like, we're going to use precedent to figure out how we're going to do this in the future.
Yeah, so it was definitely go talk to the regulators. They're not scary. They're nice guys. So I think it's a great
So as we wrap up, what does the future hold for Tellor? What are you guys focused on in order to grow into the the foremost decentralized oracle in crypto?
Sure. The biggest thing I think, kind of like we were saying, we're moving into a multi-chain future. We have to definitely be on every chain, and you got to be able to spin up new chains quickly. We're sort of becoming this like more protocol like in a lot of ways. We're trying to move less beyond like we have to help you set up a Tellor feed or anything like that. It's just, this is how when data comes on chain, it's from a staked reporter on the Tellor network, and that's just how it works. And that's kind of where we're looking and where we're trying to put a lot of our focus. It's just, how can we sort of try and remove as much of the feel about us being anything to do with like a front end or anything. It's just, this is how stuff integrates. So that's really what the future holds. So we'll be on every chain eventually. Make sure that we have and then just continue to make sure it works as it should. Making sure that it's easy to report.
Do you need more reporters, or do you need more like users?
Users are the hardest piece. I mean,
users.
It's probably similar to like, probably similar to finance. Like if somebody's willing to pay for it, people spin up reporters.
That makes sense.
It's super. Like we have lots of people trying to report, and it's it gets cutthroat pretty quickly.
So and what you're paying for is the basically you're paying like a per for the stream. Is that right? Kind of like to actually kind of get the oracle.
So you can either have it like sometimes they're one-off events. Most of the times it's like, hey, I want a price feed updated every hour, and tip the guy. And finding those integrations in the smart contracts is that's the part that we're really looking for. So hopefully we can find them.
Okay, so if any DEXs in our ecosystem want to talk to these guys, I think that these guys would be a great option for oracles.
Oh, thanks for saying that.
So finally, I'm going to end with a question that I try to ask every guest on this show. What are the 3 favorite tokens are? This is not for investment advice, so I try to basically get people to come up with tokens that are not like ones that you actually buy, but just ones that they think are interesting or doing something.
Oh, okay. Like, so I can't
random and not like basically. This is I'm trying to do this. It's not about finding like good coins to invest in, but more like, hey, what's a cool project, or like some kind of like
give them some hidden gems,
something they would actually want to check out, and because it's different. I should have told you beforehand so you could prepare, but I'll try to do that going forward.
No, I mean, obviously I'm a huge fan of TRB. That's
well, it can't be your own, so every other one.
No, so I've recently been getting into I like the Cosmos system. I think that's cool. There's another one that's just launching, Evmos. I think EVM chains over on Cosmos are going to be huge.
Is that basically like the EVM layer built on top of Cosmos?
Yeah, so that's the right. If you wanted to go to Cosmos before last week, you had to rewrite all of your smart contracts. And so people who make it easier to not have to rewrite all of your smart contracts, and you can go over to Cosmos, it's going to be really cool.
Nice. And are you thinking of using that to port your stuff over to Cosmos?
Yeah, that's what we're doing to port ours over. We're working with them.
Evmos. So cool. That's a great project. Yeah, that's a great one.
Giving you guys some alpha there.
Yeah.
They seem good. Other projects, who else are we sort of working with at the time? I don't know. Other cool ones that I've seen. I mean, I'm still a big fan. I always like Yearn. Those guys are doing super cool things over with just on their DAO side. So we've been chatting with them on how we can DAOify ourselves more.
Right.
So
they're
just really advanced.
I also like them a lot too, because I think that they're the most, I would say, organized DAO that I've seen so far.
Yeah.
And I think we can all learn a lot from them in terms of just, actually creating true decentralization in terms of getting people to do stuff together.
Yeah. No, I definitely think that's one I really like. And then another third one. I don't know, a big privacy coin fan, so always got to give a shout out to the old ones, Zcash and Monero. That's where I like to sit most of the time. I think a lot of those ones will be what gets ported over and used on bridges. Like once that's kind of my prediction is, once you get these cross-chain AMMs kickstarted, the thing most people are going to do is, rather than just go from Ethereum over to Cosmos, you're going to go through a Monero layer or go through a Zcash layer, and then then you'll be good to go.
I'm curious. I don't actually follow that space that often. Do people? Is there still a lot of usage of those, like those privacy coins and basically as a bridge currently?
Not necessarily. Most people will, because it's still really hard in a decentralized way to get over to them. That's always the tough part. It's like right now it seems like the big privacy piece, that's another coin, like Tornado Cash. Love those guys. That seems to be how people are moving.
How doing today?
Laundering money. So no, but I mean those are the big things. You see, that's what we need to build more of.
Yeah, no, I totally agree. It's like we got to build stuff that people can actually use. And some of the applications might be a bit specious, but that's how technology works. So
I mean, I always point it to, it's like free speech. If for some reason you always seem to be protecting the free speech of the neo-Nazi guy, it's not the person you agree with. It's you gotta help out those people who are doing shady things, and I think that's what we gotta do here in the space, even if it's rough.
I agree. I agree. Yeah. Well, thank you very much, Nick. This is an incredible second conversation. I'll try to edit it a bit and try to improve the way we sound, hopefully, and all kind of stuff. But ultimately, I'll probably just upload it to various channels. And maybe one final question: if people wanted to get in contact with you or find you, how should they do so on social media or wherever?
Yeah, so it's just Tellor.io. It's our website. There's Discord links there you can find, or I'm on Twitter, the Mandalore9. I mean, if you look up Tellor, just ask anyone, hey, it's Nick here, and they'll be like, yeah, here he is.
I'll link to your stuff on the show notes as well.
Cool.
So, well, thanks, Nick. Hope to talk to you next time. Bye.
All right, see you. Awesome.